Okay guys, we're on the Australian dollar, US dollar. Just quickly, as always now, with the live trades, if you want to see the overall analysis which was done this morning on this market, which led me to be watching the zones that I'm taking trades off of, just watch the review videos of the same date. It's the 17th of November. It will be available on the YouTube channel also. Okay, so the market has just been sort of chopping today. Basically, what I've been looking for this morning is some sort of a buy position from this zone down here on the expectations that this market will attempt to make some sort of a pullback. It's been in a downtrend for a few days now after breaking the sloping support and resistance line that we identified a few weeks ago on the Sunday analysis video. So basically there was a position here, a buy position, which I took. It came up. However, as it was dropping back down, it shook me out at break even on this trade. The market then sprung up and it's drifted back down into this zone right here. Let me just make sure I mark this in correctly. So right here, 125, there was a pin bar. However, we had a high impact news release at 130. So for me, that means no trades around about 130. 125 came. You can see the market spiked up and spiked down and produced this doji candle. The market has then just sort of drifted down. What I was watching for during the news release and just after the news release was very strong bearish sentiment, so engulfing candles. Bearish engulfing candles would have been my sign to stay out of the trade. Okay, so looking at this now, basically we're up into the point where I just want to be a little bit careful of the trade up here. I'm likely going to hold on to this trade if we do start coming back down a little bit. I'm expecting a pullback and then another bounce. We have a daily support and resistance line up at 7470, which is really my first target. So what I'll do is I'll let the trade run. If I will likely cut the video down, turn it back on when I'm doing anything in regards to managing the trade, or when anything happens in the trades that I can talk you through and explain. I just want to add to this video quickly. So down here, this black line is where my stop is set for this trade. So let's just have a quick look. So 13 points, just over 13 points overall being risked on the trade. Anyone who's been following me for any length of time knows that my normal trading is to have a much larger stop. However, that has been adjusted relatively recently. Couple of different reasons for that. The first one is that the new stop, I've done extensive testing as well as live trading with this stop, and it allows me to maximize profitability a lot more on the trades. With the tighter stop, it means you're going to get stopped out more often. However, with the stop I now use, taking those extra stop outs into consideration, it allows me to maximize profit a lot better. The second reason is that as I have begun to teach more and more beginners, what I have found is that with the larger stop, they take maybe 2 trades, 3 trades, and then they would have a full position loss, and that full position loss would really knock them back. So it would wipe out the profit that they've made, and it was much more likely to lead them into emotional trading. As soon as I noticed that was a common theme, it was something that I wanted to combat, and so I worked extensively. I spent a lot of time researching the stop, looking into getting the perfect stop, and this new one is the one that I have come up with. And as a bonus for me, it increases profitability over the previous stop also. So that's the reason for the adjusted stop, and it's the one you're going to see me using in the vast majority of trades now moving forward. Actually, the live trade I posted on Tuesday, I got a comment on the channel basically saying I don't know how to trade because of the where the new stop was positioned. I love when you get comments like that. It's basically what I call internet experts, people who come along and pretend like they know what they're talking about. Um, it's always negative stuff that they want to comment on, and it's always I know better than you that they want to comment on. So that is the reason for the new stop. It increases profitability, which is all I care about. I'm not bothered about what textbooks say you should do or what other YouTube people say you should do. Put your stop above the previous high or below the previous low. I'm not interested in what they say. And when I was first learning how to trade, that's the sort of stuff that I follow blindly. And guess what? I was not profitable. So now anything I do in trading is designed to increase my profitability, help the people that I'm educating. That's the only two considerations I take. Okay, so you can basically see this market now is reacting off of what is my management point. As I've mentioned, I am going to give this trade a little bit of wiggle room, just purely because it has been in the downtrend and it has came into a strong level where I would expect that bounce or some sort of a bounce. 13.3 points is the stop. I'll just, whoops, that's not right. 13.3 points is what we're risking. I'm just going to leave that here. When trading lower time frames like this, anywhere near 1-to-1, I am more than happy with. I have a very good hit rate. The trades that I take are very high probability of completing, so 1-to-1 is perfect for me. I also am not a trader who gets into a trade. Well, not. Let me just clarify that. Not on the lower time frames. I'm not a trader who gets into a trade with, say, a target of 1-to-3 risk reward, and I'm in that trade unless it reaches that target or stops me out. I can understand that on higher time frames because 4-hour daily, you can't sit for 4 or 5 days a week, a month in front of your computer managing that trade. But on the 5-minute time frame, I can sit, I can manage this trade. If the trade is giving me clear signs to exit, I'm going to exit the trade. I'm not going to let it stop me out. I don't understand the reasoning behind that type of trading. It doesn't make any sense to me. I'm here to make money. I'm not here just to blindly follow trading opinion. So for me, for example, on the vast majority of trades I'll have a management point like this, and I'll do a couple of things. So either depending on the zone I'm trading off of and depending on what my expectations are, I'll just automatically exit the trade as it comes back against me towards break even. If it is a higher probability trade, or what I determine to be a higher probability trade, I will hold on to it for the full position loss if that's what's necessary. Occasionally what I will do is when it gets to the management point, I will close partial profits and then let the rest run. And occasionally what I'll do is I will close enough partial profits so that if the trade reverses and comes down and stops me out for a full position, I will end up at break even. Basically, it's a way to give your trade more wiggle room whilst still protecting yourself. Every trade is different for me, but that is essentially what I do. Okay, guys, so we're just popping up. 7470 is really my target. So I'm just watching. Watching it now, it's there. You can see it reacting. Okay, so round about 15 points, so better than 1-to-1 risk reward. Not bad for a trader who doesn't have any idea what he is doing. So 5, 10, 15 minutes over 1-to-1 risk reward. That will be me now finished for the day. As mentioned, this was the first trade of the day, but it ended up at break even. You can see if I held onto it, it would have got to the target. However, for me, just the way it's set up right at the top of the zone like this, I had the expectation that at some point the market was going to test the zone deeper, which is exactly what it did. When it did it this time, I was more than happy to hold on to it, give it a little bit more wiggle room, looking for that target. Okay guys, as always, I hope that was helpful. I'm James Orr, and thank you.